In a recent assessment, Moody's Investor Service has raised Nigeria's credit outlook from stable to positive, commending Africa's largest economy's efforts to bolster its fiscal position and strengthen foreign reserves. According to the service firm, the positive outlook change comes as a result of the Nigerian government's actions, including the devaluation of the naira and the removal of the largest part of the oil subsidy. And the positive outlook upgrade from Moody's is seen as a vote of confidence in the government's ability to address these challenges and improve the country's economic outlook. Well, for more insight, an investment research analyst at ARM Securities, Ms. Calista Chileke, joins me virtually now. Thank you. Good to see you, Calista. I appreciate you for joining me. So, amid high inflation rate and naira depreciation, Moody's rates Nigeria's outlook as positive. So how strong is this positive outlook on Nigeria? And how do you see this translating to an actual credit rating upgrade for the country?
Okay, as you have said, very recently, the Moody's, the rating agency, revised outlook on Nigeria from stable to positive, and also affirmed its CAA1 long-term foreign currency and local currency issuer ratings. And they cited the possible reversal of the deterioration in the country's fiscal and external position due to the government's recent reform efforts. That is the unification of the exchange rate market and to adapt to address the FX issues, and as well as the removal of the PMS subsidies that ate deep into Nigeria's fiscal and external position. The affirmation of the CAA1 rating reflects Nigeria's still weak fiscal and external position, and the recent reform efforts may not be enough to improve its credit profile, given Nigeria's outstanding credit weaknesses. Also, the increasingly high inflation puts spending pressures on the government and raises social risks, while we also see that the extent of fiscal relief from the removal of oil subsidy, that is the PMS subsidy, is unclear at this stage, as because of we're not sure of the direction of crude oil production going forward. So that just last year, the OPEC Plus put a limit of 1.58 million barrels per day on how much crude oil in Nigeria could be produced in 2020.
Let me hold your thought there. We quickly take a break, and when we return, of course, we'll continue our conversation from there. Back in a moment. This is Business Nigeria.
Every major news story is with many perspectives and layered with different levels of impact.
Hello. What time did this happen? We will be right there.
At TVC News, we follow the big and major news, gathering the facts, witnessing the outcome.
I am here live at the aftermath of the approval of the new national minimum wage.
We are TV station of the year, not just for breaking news, but for being first, fair and accurate. TVC News, first with breaking news.
Doubt and fear doesn't occur at the canvas. It shows in the canvas. It shows the conation of raw earthen material slabbed, stroked and molded at a pace provided by the doubt and fear. Every move weigh in the struggle of one to the other, merging the past to the present, brushstrokes of colors seen but not known. For when the wailing stops, the pieces settle down in abject beauty erected for a century of a century. Speaking, advocating, protesting, as the arts are meant to be.
Our planet, our home, threatened by man's activities with fears of mass extinction on the rise. On Green Angle, we examine the issues that affect our environment, seek solutions to put us on track to secure and restore a cleaner and greener world for generations to come.
Thank you for joining us now. If you're just joining us, this is Business Nigeria coming to you live from our studios. Let's continue our conversation. Also having Ms. Calista Chilikwe, who is joining us to look at Moody's positive outlook for Nigeria economy. Thank you for your time, Chilikwe. Let's continue the conversation from there. So Moody's specifically cited reforms such as naira devaluation and fuel subsidy removal as the basis for its report. How do you think these reforms are driving the improved outlook as reported when compared to other rating agencies?
Okay, last year we saw several global rating agencies upgrade or downgrade Nigeria's rating. So, for example, in September 2023, we saw that FTSE Russell announced the downgrading of Nigeria's FTSE equity country classification status from a frontier market status to an unclassified market status. They also considered the existing low FX liquidity in the market, and which was hindering foreign investors from repatriating their capital at a foreign exchange rate which was consistent with the FTSE Russell equity indices. Also hot on the heels of the FTSE's downgrade, we saw that the MSCI reclassified MSCI Nigeria indexes from frontier market to standalone market in October of 2023. And similar to the FTSE Russell, MSCI attributed the primary reason for their downgrade to the same persistent FX liquidity issues that were facing that hindered foreign investors from repatriating back their funds. They even gave, before the downgrade, they even gave some time for the FX liberalization policy to take effect. But unfortunately, Nigeria's FX supply issues still persisted. So we see a trend among these credit rating agencies saying, oh, these FX issues still persist and it's affecting your economy, so we have to downgrade you. But however, a breath of fresh air came when Fitch Ratings affirmed Nigeria's long-term foreign currency issuer default rating at B- with a stable outlook. They took into account the removal of subsidy and the inflation of exchange rates across all markets. At that time, they saw a partial recovery in oil production to 1.57 million barrels per day in September 2023. But as usual, the rating is constrained by FX shortages, inflation, slower GDP growth, as among other factors. As we can see that this same consideration made by Moody's, and it shows that these reforms are welcome. That is the removal of fuel subsidy and the FX liberalization policy. They are welcomed by global credit agencies, and these ratings could help to boost foreign investors' presence in the economy. But it is very crucial for us to acknowledge the intricate challenges that persist, such as structural issues in the economy, FX crisis, like these agencies have noted in the past, and inflationary pressures. And addressing these concerns is very imperative to attracting increased foreign investor participation.
Okay. So let's talk more about this positive outlook, what it means for ordinary Nigerians, because these are good numbers. But the question has been how this is expected to translate into tangible improvement in the living standard and job opportunities for the average Nigerian. Speak to us more about this. When we see numbers like this for average man in the street, they want to see how this affect them in terms of their earning, livelihood, and all of that. Speak to us on that.
Okay, so the thing is, Moody has stated that the removal of PMS subsidy and FX liberalization policy are the major drivers for the upgrade in the outlook. But when you bring this to the domestic economy, we see that these two policy reforms are what has driven up inflation. Cost of goods and services are extremely high, especially food and transport. Now, inflation has come in today at 29.90% year on year, as at January 2023, and this is compared to 28.92% year on year that was recorded in December 2023. And this is just the continuation of the upward trajectory that inflation witnessed in 2023. Hence, in the short term, we have not seen any improvements in the living standard of the common Nigerian. However, what we've seen is lower purchasing power as a result of inflationary effects on wages and salaries, as well as higher cost of food and transport prices.
Well, how significant is the devaluation of the naira and subsidy removal in driving this positive outlook? Because Moody cited devaluation of the naira and, of course, the removal of subsidy.
Okay, so the unification of the FX windows, which subsequently led to the devaluation of the naira, was a step the government took in order to boost the country's external reserves, which we know to be rapidly deteriorating. If you look at other rating agencies that have downgraded the Nigerian economy, they cited like I said earlier, they cited the inability of foreign investors to repatriate their funds back as a result of our low foreign reserves. But however, with the FX liberation policy, we have started to see that CBN has commenced clearing FX backlogs. And overall, the unification of the foreign exchange window represent maybe first steps, baby steps to addressing the country's foreign exchange shortages and supporting its external rebalancing. On the removal of subsidies, that was a major debate before it was eventually removed somewhat, and we saw that subsidy payment took a big toll on the expenditure side of the government's budget. And so with the removal, it would help to reduce further deterioration of Nigeria's fiscal position, as the government is able to channel the funds that could have been used for these subsidies, payment of these subsidies, into capital projects that can generate revenue. So like I mentioned before, to global rating agencies, these are positive strides, but to the common Nigerian man in domestic terms, they will not, the common Nigerian will not agree with these global rating agencies.
Let's talk about the potential implication of this positive outlook for foreign investment attraction. How is this likely to improve the increase in the inflows of funds with regards to investor confidence?
Okay, so we believe that this is a positive for the Nigerian investment environment, as it plays a major role in attracting foreign investors. However, in the short term, we may not see a huge impact on the capital market, seeing that this space, that's the equities market, is very much dominated by domestic players. From a report by the NGX, so that foreign participation in the market as at 2023, the year-to-date return was 11.48%. Comparing this to 2022 year-to-date return, which was 16.32%, we can see that there has been a significant drop. However, in the mid to long term, and with forex liquidity potentially out of the way through the $10 billion FX inflows from Afreximbank and the NLNG dividend securitization, this could help to improve dollar liquidity. Also, we've seen that, as I mentioned earlier, CBN has started clearing FX backlogs, and this could help to reduce downward pressure on the exchange rate and improve FX liquidity. And finally, Nigeria's interest rate environment is significantly higher than other emerging markets, and this may incentivize foreign portfolio investors to pull in their funds into Nigeria, leading to more inflows. And as regards to foreign direct investment, we think that this goes beyond economic situations and challenges, as it also factors in structural issues such as insecurity, poor infrastructure, lack of power supply, road network, and others. And all this, Nigeria has not put all this into place yet.
Okay. I think we just have to leave it there. Thank you so much, Ms. Kalista Chileke, investment research analyst at ARM Securities. Thank you for coming on Business Nigeria.